We're going to jump right into our panel. I'm really excited. First of all, we're going to invite Chris back up to join our panel, but we'll also have Blake Allen from M&P joining us and Tom Herdman from Sky Global Communications. So if I get the panel to just join me on stage. All right. So
Tax is scary.
yeah, it is scary. I haven't really started mine yet this year, and I don't really want to. So before we get started, we've already heard from you, but perhaps everybody could just introduce themselves.
Sure. So my name's Blake Allen. I'm a senior manager at M&P, and my specialty is international tax. So I've kind of been following cryptocurrency now for a couple of years, and it's just interesting to see it really pick up steam last year, and especially with our clientele, it's starting to become prevalent. So we're seeing more and more of it.
Good. I'm not a specialist in tax. I'm just a regular schmuck who either has some cryptocurrency or I do business in cryptocurrency. So I work for Sky Global Communications. It doesn't have anything to do with cryptocurrency itself, but it is a cryptography company. So we deal with military-grade encrypted devices for messaging and communication. So anybody who uses our device will be communicating completely anonymous and completely secure. And we'll be adding a cryptocurrency element to it, a wallet, and a payment system. CRA is here? No CRA? And I'm a technical analyst, so I chart for derivatives, futures, equities, and for the last year I've been charting Bitcoin for certain people in the Bitcoin community to help them time their investing, like the Sunday 3 weeks ago. And I'm interested in the tax implications myself, obviously. Thank you.
Fantastic. Maybe just a quick.
I'm Chris. I just presented everything you guys just saw. I've founded Cone Taxes, which is here to help. So.
Cool. So we'll just start off really basic. If I sold some cryptocurrency this year, what do I need to do? What is the first step? And everybody can just jump in on the answers.
Yeah. So I guess you kind of got to back up and first figure out how did you get cryptocurrency, right? Because there's many ways you could have obtained it. You could have bought it on an exchange. You could have received it as a gift. You could have mined it. You could have received it in a barter transaction where you provided some kind of service and somebody paid you in cryptocurrency. So there's lots of ways you can obtain cryptocurrency. So depending on the way that you obtained it, kind of directly has an impact on when you sell it. But I guess the first thing to identify is when you do sell it, and that's anytime you exchange it for another cryptocurrency or you sell it for fiat currency, it's a reportable transaction. And so let's just say you bought it for cash on an exchange. You took your Canadian dollars, put it on an exchange, and you bought some cryptocurrency. That initial investment that you make, that becomes your tax basis for Canadian tax purposes. So that's your cost. And every time that you buy more, you further add to the cost basis in that cryptocurrency. And you attract your cost basis on a specific cryptocurrency. So let's just say, let's disregard all the other cryptocurrencies and just focus on Bitcoin for a second. So let's say all you did was buy Bitcoin. So if on day one you bought one Bitcoin for $100, and then on day two you bought one Bitcoin for $1,000, you've now spent $1,100 on Bitcoin. And let's say you now own 2 Bitcoins. So then what would be your cost basis in those 2 Bitcoins? Well, it's $1,100. And then if you wanted to figure out, okay, well, if I'm going to sell the Bitcoin in the future, how would I be taxed? Well, it's pretty simple. You would just take the $1,100 that you spent, and you would take the 2 Bitcoins that you have, and you divide 1,100 by 2, and that forms the basis of each Bitcoin that you own. And you could unit it all the way down to Satoshis if you wanted, and figure out what your dollar cost average is per Satoshi. And as you sell Bitcoin, then you would realize a gain on the amount that you sold it for over your dollar cost average. Now that's like the simplest transaction I think there is. That's just straight up buying and then eventually selling. Obviously it gets a lot more complicated, because then you could buy Bitcoin, and then you could send it to an exchange like Binance and exchange it for another cryptocurrency, and exchange it for another one and another one and another one, and eventually come back to fiat, or maybe not. But each time you actually convert it or exchange it for something else, the CRA sees it as a barter transaction. And so every time you do that, you've actually disposed of one cryptocurrency and bought another. And so let's just say you took your Bitcoin that you had, your $1,100, you had 2 Bitcoins and you had $1,100 of tax basis in those 2 Bitcoins. Let's say you exchange those 2 Bitcoins for Ethereum, and you got 10 Ethereums or 20 Ethereums. Just do the math, we'll say 20. So if your Bitcoins appreciated before you exchanged for Ethereum, you potentially have a gain there in the Canadian dollar equivalent of what Ethereum's worth at the time you exchange it. And so once you actually exchange your 2 Bitcoin for the 10 or 20 Ethereum, you then lock in a gain on your disposition of your Bitcoin, and you form the new tax basis for your Ethereum.
This is why we hire accountants.
And so this would just keep happening over and over if you kept exchanging for different currencies, or for different cryptocurrencies. The one thing to keep in mind is, let's say you bought like I said, go back to my example where you bought 2 Bitcoin for $1,100. Actually, I'll just keep the math simple. Let's say you bought 2 Bitcoin for $2,000. So each one has a basis of $1,000, whether you paid $50 for one, and it's the dollar cost average. And so if you were to sell 1 Bitcoin for like 10 Ethereums, your dollar cost average of your original Bitcoin stays the one that you didn't sell remains at $1,000. So kind of every time you buy more cryptocurrency in that same cryptocurrency, you dollar cost average that cryptocurrency. But when you sell it, it has no impact on like if you sold a portion of it.
Okay, so then if you do it at a different time period, the third coin, you'd take the 1,000 that you still own, the 1 coin, with the new price and make a new average.
If you acquired more of the same coin,
At a $3,000 price per coin.
yeah, so then you have a new blended dollar cost average of that coin.
Okay.
So why would you get taxed on continuous investment, whereas if you exchange that or convert that to fiat, then it should be taxed, right?
Yeah,
Like
I
you're
mean,
saying you keep buying different altcoins being either in Bitcoin.
yeah,
As ICO comes out, right? A lot of things coming out. So you bought Ethereum, you bought ICOs, you bought different coins. There's a bunch of coins are coming out, you know, utility coin, coming out like that. So when you buy all that stuff, it's actually being invested the way I see it.
yeah, no,
Because my
yeah,
investment, I'm not withdrawing it. I'm not buying a Ferrari.
yeah.
I'm putting it there, so 10 years from now, my kids could be secure instead of giving money to,
Yeah,
all these guys at banks.
and I totally agree with you. Like, it would be awesome if there was some kind of exemption and some kind of rule where you could exchange one crypto for another and not be taxed. Because I have cryptocurrency myself, and I lots of times the whole tax argument makes me not do things, right? Because I don't want to trigger things.
So what's stock? Do they go with the same?
So the reason why that each time you exchange one cryptocurrency for another, because they view cryptocurrency, the CRA, and this is the CRA's position. So keep in mind, like this is a new landscape. The CRA has put out some positions, but it's by no means been challenged in court. It hasn't been fully thought out. There's not rules specific to cryptocurrency. They're trying to apply old rules to kind of new technology, and so what CRA views cryptocurrency as commodity, not a currency, as a commodity.
So everyone's different. Like one coin is a
Every
real
yeah.
estate, one other coin is a stock.
Well, it's like if I had gold and you had silver, and I gave you, a bar of gold for like 3 pieces of silver, we would have a barter transaction, and that's what they say cryptocurrency is. Basically, every time if I exchange Bitcoin for your Ethereum, we've done a barter transaction, and so if I have 100% gain on my Bitcoin, I've locked it in, meaning I've realized it, and now I have to report it and pay tax on it.
So what if you bought something else with your cryptocurrency? What if I went and I bought a couch or I bought a car or something like that? How would that work?
The same rules would apply.
Okay.
So, and it would be the fair market value of the asset that you bought. So if you went and bought a car and you negotiated with the dealer and the dealer was like, the car's gonna cost you 30 grand. That is effectively what you sold your Bitcoin for.
But there's no capital gain by buying a car.
You'd still have it. So the way that the government thinks about it, it's actually the same way for currencies. So if you buy yen and then you sold yen and you bought euros, right? You're trading yen for euros. You still sold yen and you bought euros. And so when you sell your Bitcoin to buy the car, you still sold it. So now the question is, what's the price that you of the value of the Bitcoin? And it is equal to the value of the thing that you exchanged it for.
Yeah, but you don't get tax on it. $10,000 Canadian and go to the bank and
But we're saying that you do actually.
Technically, you do. So, like, here's an example. If you were to if you had $10,000 Canadian in your bank account,
which is your cash money, right?
Your cash money.
Forward money is your cash money.
because you have to remember as a Canadian.
Hashtag cash money. Actually, hashtag I comply for those of you that are tweeting.
As a Canadian, your taxes are denominated in Canadian dollars. Everything you do is in Canadian dollars. So if you had $10,000 Canadian in your bank account and you went and exchanged it for, whatever the exchange rate is, let's say you end up with $8,000 US.
Yeah.
If the US dollar appreciates, and then you exchange back to Canadian dollars, you're gonna have more Canadian dollars. That's taxable. And technically, if you took your US dollars and then went and bought a car in the US, and the US dollars appreciated from when you bought it, you actually have a gain there. Most people don't report it because the Canadian US dollar doesn't change like dramatically like cryptocurrency, where one day it goes up 25%.
And that's a capital gain or income?
Well, it's factual. It depends.
Depends.
If you're a business and you're transacting in Canadian US dollars and it's part of your business, then it's probably on account of income. But if you're just speculating as an investment and you're holding US dollars and then you buy US dollars in January and you sell it in July, likely capital if you can argue that you were doing it for investment and speculative purposes.
So you talk about operating as a business. What if I mined some cryptocurrency? How does that work?
So this is kind of comes back to your question to a certain extent. What the CRA and IRS is really looking for is, did you make money, right? And so if you're buying one Ethereum for $1,000 and then selling it for $1,200 to some other coin, you've made money, that $200. And so they don't care whether or not it was denominated in fiat Canadian dollars. They see that you made money. And so for mining, if you mined, and let's say you got one full Bitcoin from your mining operation, they would want to know each time that you were given some Bitcoin, what was the Canadian dollar or US dollar value of that Bitcoin when you got it, because you've just now made money that you have to pay taxes on. This is income tax as opposed to capital gains tax. So when you get your mining, you would have your income tax, and then you hold it, you have no capital gains tax, right? But then if you get one Bitcoin for $1,000, you've now $1,000 of income. Some point in the future, you sell it, you now have a capital gain or a capital loss, even if you've exchanged it for some other coin.
So even if somebody bought Bitcoin, which was worth 19 grand in December, they got slaughtered, right?
That's one of our questions.
But in January, and it went down to 8. It is 8 right now, right? So a lot of people got in because of the hype. What about that loss?
That's a capital loss. So
Well,
the thing is, it's in a different tax year though, right? So like it's not going to help you with your previous tax year because it's now today,
Oh,
right? It's in
it'll
2018.
help in 11 months.
It'll help you, next April.
I have to make a clarity on Canada's. It's a factual determination whether something's on account of capital or income. Okay, if you are transacting in cryptocurrency as part of your business, like perhaps Tom here, for example, if he's transacting in it daily and it forms part of his business income and business expenses and it's his business, it's likely that he's probably going to be on account of capital, and therefore if he has appreciations, he's taxed 100%. If he has losses, those are deductible losses. If you are somebody who is just doing this for investment purposes and you're just kind of making some investments and you're not becoming a trader, and I'll talk more about that in a second, then you're likely transacting on capital account. And what that means is when you have a gain, it's half taxable. It's good, right? But when you have a loss, it's a capital loss. And capital losses are restricted to capital gains. So if you were somebody who bought at the all-time high in December and you realized a capital loss, that capital loss you can't use until you have a capital gain. But capital losses can be carried forward. So let's say you lost $10,000.
Can I give you an example? Like,
Sure. Go ahead.
I
Yeah.
bought in September $38,000 worth
Yeah.
of Bitcoin, but I bought a bunch of Bitcoin. Went up to 374,000
Yeah.
in December.
Yeah.
And when I look at it now, it's back to 38,000.
But have you sold it?
No, I haven't.
So nothing's happened.
So you could be in a really difficult spot, though, actually, because
You lost money.
if you went from 30,000, 38,000 to 350,000, and you were trading at those very high, if you traded any coins
Swing trade, just bought it and just left it.
and you left, well, then you're okay. But if what would be horrible is if you made any trades when we were at the highs in December, because you would have locked in massive gains, to like the tunes of $230,000, right? And now you would have had no money to pay it with.
Gains get taxed now, but the losses get taxed in the year.
Gains and losses are taxed both in the same year that they happen. The reason why we have a situation is because it rose in December, the year ended, January started, and then all of the crypto fell. So this is just like a very rare, screwy thing that's happening.
What is a realized gain? That's essentially the question.
So when you buy cryptocurrency, right? So I'm just going to use Bitcoin because everybody knows it and it's the easy one to use. So let's say I buy Bitcoin for $1,000, right? One Bitcoin. If you hold on to it and you don't do anything with it, and it goes up to $10,000, you have an unrealized gain of $9,000. So unrealized means you haven't sold it. You haven't done anything to realize the gain. There's no disposition. A disposition would occur as soon as you exchange it to a third party for something else. If you took your Bitcoin from your cold stored wallet and moved your own Bitcoin to an exchange, and you still held it on the exchange, you haven't disposed of it, you still own it, right? It's still yours. The second that you put it on the exchange and sell it, or the second that you take it out of your cold storage or your wallet and you give it to somebody else in exchange for something, you've disposed of it. You no longer own the Bitcoin, and then that's when you've realized that's when you've realized any pregnant gain or pregnant loss. You've then realized it at that point.
If I could add on to that, it's a little bit different in the US, so I hope you can elaborate on this, but there's two other ways that you could effectively dispose of your Bitcoin without actually making it taxable. One of them is if you have a gift. So if you're gifting it to somebody else, there's no taxable event when you're transferring it unless you exceed a very large limit in the US of like $5.5 million per person. And then that person will just inherit your cost basis, but then again, there's no taxable event between the two people, and it can't be in exchange for anything. You can't say, I'll gift you this and you gift me that. It has to be one way, I just gifted you something. The other thing you could do is you could donate. So where I just gave that example where something really horrible could have happened, where you could have traded a lot when it was at its peak, and then it crashed. If you donate when it's at the peak, in the US anyway, you get to get the full amount of whatever the value was when you donated it, and there's no capital gain from that increase. And so you get to lock in a no capital gain, and you get a donation, which is a deductible equal to the full amount. And then even though it crashes, you still get that full deductible from your charitable donation.
But this is different in Canada, correct?
Yeah,
Sorry.
Canada,
Yeah.
so gifting would be a disposition, right? So if you have an unrealized gain or an unrealized loss, you have a disposition, you have a gain or a loss.
Barter or gift, the same thing.
If you gift it, you've disposed of it.
So in
Family?
US, in 5 years, everyone's going to be
Family?
donating money to each other, not expecting anything in return.
Gifting to family is even worse because
That probably wouldn't fly.
What if you give it to someone in your family who is a dependent? Like, what if you bought their first crypto kitty?
okay, let's just so if you gift like regardless if you're gifting and you have an unrealized gain, you're going to have a gain. Okay, like because you can't just gift something and get out of your tax liability. When you gift it to another person, let's say that person's not related to you, they're like a friend or a distant relative. The minute you send it to them, whatever the value of the cryptocurrency is at that time becomes their cost basis. Now, if you were to donate the cryptocurrency, and again, let's say you were on account of capital, so you'd have capital gains and losses. You're not using this in your business. You would still trigger, so let's say you had a gain. So you have a $9,000 gain in the example I said. You bought for $1,000, sold. You donate at $10,000. You still have a capital gain. So you have a $9,000 gain, which is half taxable, but your donation receipt is 100%. So you could actually have a larger deduction than the income.
Well, that's pretty cool.
It's still, so you could start a religion or something.
What if I give to a family member?
If you gift to a family member, it's the same thing. The only caveat with gifting to family members is you can't take the loss. The loss, because it's called stop loss. So if if let's say you were in a situation where you bought it at $19,000 and today it's at $10,000 and you want to lock in the loss, you're just going to give it to a family member and try to lock in the loss, you can pour out your taxes. That loss is actually denied until the family member then sells. Once the family member sold it, then you can realize the loss. Yeah.
Sure.
Yeah, so I just want to clarify, you said something about it happening in the same, that it's, want to get the clarity about the years. Does
Yeah.
it go with, that's my first question, does it go with, like if I sold some Bitcoin in December of 2018, then would I pay for my 2017, that's on my 2017 taxes,
Correct.
right? And if I sold some last month, then it's on 2018 taxes,
Correct.
right?
Yeah.
And then the other thing I want to clarify is when you start getting into trading anything, then it's no longer a capital gain, but it's something else. I just did that.
Yeah. Yeah. I mean,
the first time.
let's again, it's a factual determination, right?
Yeah.
So if you bought some cryptocurrency and I think this might be a common theme where a lot of people bought in 2017. It just went up and up and up. So you just hold it. You're a capital investor, and then it drops, and then everyone panics and they start trading and doing these things. And now everyone's worried about being a trader. I think there's a certain line at which you cross that you potentially lock yourself into being a trader. So you have to keep this in mind when you're exchanging back and forth between all these cryptocurrencies. If you start doing this consistently and throughout the year, you're going to be seen as a trader, because when you report your gains and losses on your tax return, it's just going to show hundreds of buys and sells, right? And so that's something you have to kind of weigh in your mind that, okay, is the trading of cryptocurrency, am I good enough to do this that I can not only beat the market but also beat the tax bill,
Right.
because it's a higher tax bill, right?
Yeah.
You're not half taxed. So I guess what I'm trying to say is that just because you bought, you were long, and you should be on account of capital, and then maybe you do a few trades.
Yeah.
I don't think that totally ruins it for you.
No?
It's a gray
Okay.
area.
What's the point?
There's no
There's
Whatever they want, it's a gray
Yeah.
area.
it's a factual.
Yeah.
It's what how
We're gonna-
it comes back to frequency and your intent.
After, we're going to get back to the questions that I have here, but we have plenty of time at the end. I love how engaged everyone is, though. This is awesome.
I'd say frequency and intent are your. Like, did you intend to be a trader? Do you have are you how often are you trying to trade the swings, or are you trying to trade like the growth
Right.
and appreciation? What are you trying
Yeah.
to trade? And I think that really is the defining factor of are you capital or income.
There's no exact number of trades they use.
Yeah.
Tax-free savings account, people have even been set their business income and they got fully taxed on $10 million they grew their account to.
Can you trade crypto in your TFSA, by the way?
You cannot, because it's not a qualifying investment. The only way you could do it is if you could find somehow like stocks that are somehow tied to a cryptocurrency, which is very tough. I've personally just played around and tried to see what I could do, and like for example, the Bitcoin trust in the U.S. My bank didn't let me buy it. I was just playing to see if I could buy it in my TSFA or RRSP and things like that. It wouldn't let me. So I imagine people have similar results. I know I've heard of potentially some stuff in Europe you might be able to like get your hands on, but again, it's kind of like a backdoor way in, and so. But actually, holding the coins yourself, you cannot.
And what if I won it in a contest?
there's a question.
Or we're going to do those questions at the
He's been
end.
very persistent, though. Maybe we should just. He's been like got his hand up like. the whole
Okay,
time.
this is the last one, though.
Yeah, no, it's in regards to losses. Obviously, there's a lot of people have lost money from hacking.
Yeah.
People have gone into Ponzi schemes. I feel like it's a pretty good background. It's actually I understand it, but hearing it from you would make me feel better about it. Is that considered a tax loss? If I put money into an exchange, been hacked, and lost $10,000?
So, I mean, there's been no guidance on this.
My friend, yeah, he literally made $5,000 in like 3 days or whatever.
Yeah.
And then he's in his Bittrex account somewhere and told me that
Someone hacked him? Yeah.
Oh, it's in Bitcoin, and he told back, my Bitcoin's gone, and then nowhere to be found. So
Yeah, I mean, again, it comes down to the two things, like, are you capital or is it your business? If it's your business, like Tom here, and if he was hacked, he'd probably be able to write off the amount as a tax deduction. If it's your investment, I'm not positive if it's a capital loss, but I will tell you that it's the amount that you paid for it. So, for example, if you paid $100 for the Bitcoin, and then it's worth $10,000, your loss isn't $10,000. Your loss is $100.
Okay. Okay.
Whatever you paid, it's not
Right.
what it was worth.
Okay. And what if I won it in a contest or a prize or something? What would happen then?
Yeah. So if you won it like a lottery, then like most lotteries in Canada, it wouldn't be taxable to you. The moment you receive it would form your basis. So if you won, say, a Bitcoin, and again, there's been a lot of this stuff I have to caveat that the CRA has barely any guidance. So all of this can change. It's all new space. There's the federal budget's coming out tomorrow. They could, everything I said could be erased tomorrow. But my expectation is that if you want it like a lottery system or something, the moment you receive it, whatever the value of it becomes your basis. So if you received a Bitcoin today and it's worth $10,000, that's your basis. And if you sell it for 20, you're gonna have a capital gain on the appreciation.
And is there any time that you don't have to pay tax on your crypto investments?
If you don't sell it.
Okay.
That's one thing.
Oh, certainly.
If you mine it, that would be income, correct?
Yes.
And if you mine it and that's deemed income at that time, but you don't sell it, will it become capital gains if you keep that?
Whenever you do so.
Yes and no.
Yeah.
Again, it's definitely income.
Yeah.
Like, so like you mine it, let's say it's worth $1,000 when it's rewarded to you, it's income of $1,000. If you hold it and then it grows to $10,000 and then you sell it, potentially it could be a capital gain.
Okay.
But like income versus capital is again a factual determination. Everybody's case is different. You know, there's not a defined rule. It's a, you know, the CRA will look at a whole bunch of things and see what you're doing and what your intent was and all these things. So if your business is a miner and then your intent is to mine the cryptocurrency and then speculate, so speculate meaning hold it, because if you're not going to sell it right away, then you're speculating, right? Because if you're a miner, you mine it, you get rewarded with it. If your business is just mining, technically you should just sell it right away, right? If you take on the added business of you want to speculate, and you're gonna be consistent with that, you're gonna hold it, then potentially you could have capital gains treatment. But if you're not consistent with that, like let's say sometimes you hold it because it's convenient because the price is going up, but then other times you're selling right away or you're trading back and forth, you could throw off the capital treatment. So it's not black or white, it's gray and it's factual. But in a simple case of mining it and holding on to it for a long period of time, then selling, I think you could argue that you were speculating on the coins that you held, and that could potentially be capital treatment.
Okay, thank you.
So just don't do any more trades after that.
I'm not saying you can't trade. I'm just saying don't be like if you're going to be a trader, if you're going to be a trader, then you know like that's your intent.
Right.
You're going to trade the day swings. Your mindset's different than somebody who's intending to have the capital.
My
Have it
thing
for
is
over
to make a
time.
big gain
Yeah.
from 1,000 to 10,000. Don't start trading at that point heavily. Try to go with just.
I'm not saying you're not allowed to sell it. You can sell it. Like if that happened, if you were you were speculating on the price and you bought it on day one, and all of a sudden like 3 weeks later you've like 10x, and you're like, well, okay, well I need to sell. That doesn't mean you're a trader because you sell.
You'll probably be capital
Okay,
gain.
Yeah.
the next question
Sorry.
is, yeah, no problem. This is very interesting. I've learned a lot. So another thing people were wondering is, what about all these airdrops? So has anybody, maybe some of you here have gotten some airdrops in your wallets? Are those taxable? Do you know what I'm talking about?
What does the U.S. say?
So the U.S. It's not 100% clear, but you have two ways of thinking about it. Thinking one is you would do the same thing as if it was like kind of given to you as income, and you'd find out what the value was when it was airdropped to you. But the problem with that methodology is that it's not always clear when you received it, and if it's airdropped and it's like not available on an open market or anything like that, you don't know what its value is. And so the way that we do it, and the way that a lot of the CPAs that we've talked to in the U.S. do it, is the cost basis is 0. And so it's yours, you got it for free, because you didn't pay anything to get an airdrop currency or a hard fork currency. You just got it for free. So cost basis of 0 makes sense. And then whenever you sell it, you would have a gain, which would be like the full amount.
Yeah, I think so. There's been no guidance on, again, new territory, new world here. CRA hasn't issued any guidance on this. I think, given that there's no guidance, you could probably take your own positions on this, and I think there's a couple ways to do it. Chris outlined the approach that I would take is that the cost basis for that fork is 0 or airdrop, and when you sell it, you have a gain. And the reason why I think that's appropriate, and I think the CRA would be unfair to say that it's income when there's a fork or airdrop, is because most of these coins don't have liquidity. So just because you receive a coin and it's worth $200, the chances of you being able to sell it for $200 are very low. So I just think there's a case to argue that it's not actually liquid, and it should really be that your basis is 0, and when you actually sell it, that's when you have your taxable event. But again, nothing's been said on this. There's been no guidance. That could change, but that's just how I would do it.
Thank you.
Yeah.
One more question that I have here, and then probably we'll wrap it up. So what is, I keep hearing ACB. Can somebody explain to me what this is?
Yeah, I explained that earlier. It's your adjusted cost base.
Okay,
And
got
that's-
it.
I think a lot of people here would be familiar with the term dollar cost average. It's kind of, that's how you calculate your adjusted cost base.
Okay, cool. Well, thank you so much, guys. That went by really fast, and that was a lot of great information. We'll be around in the room. There's more food, more drinks, and Matthew's just going to come up and say a few words.
Awesome. I just wanted to thank everyone for coming out, with a caveat as well that, as Chris said at the beginning of his presentation, and this is all about information. Don't take it as advice. As Blake mentioned several times, factual or circumstances surrounding your situation are very important. So, it's good for you to understand information and to find some tools that are out there, but also make sure you seek the advice of a professional to look through your specific situation and help you with whatever your certain scenario requires. So, thank you so much for coming out.
Do you guys mind if I say one more thing?
Yeah.
I just want to say one thing that I didn't get to say, because Chris covered the U.S. side of this, and I didn't get a chance to cover it. So Canada has foreign reporting requirements. There's a form when you file your taxes called a 21135, and at any time in a taxation year, if you own foreign specified property, $100,000 Canadian equivalent during the year, you have to report it. And so I just wanted to highlight this because there's a number of ways in the cryptocurrency world you can get caught by this. If you own cryptocurrency directly, like you hold cryptocurrency in your own wallet, you're not caught by this because it's stateless. Like it's not anywhere. It's in the internet, right? The second that you own it on an exchange, you could potentially be caught by these foreign reporting requirements, because most of these exchanges are not in Canada, right? Like Binance, Bitstamp, all the U.S. exchanges. You have all these exchanges that you're potentially using. Aside from the Canadian exchanges, if you store cryptocurrency or fiat on any of those exchanges, and the dollar amount at any time in the year is more than $100,000 Canadian, you have to report those holdings on that form. Because I think Chris mentioned the U.S. reporting is around 10,000 U.S. dollars. The Canadian one's around $100,000 Canadian, and it's whether you're holding on those exchanges. So,
And that's cumulative across all foreign holdings?
yeah, it's just anytime you have foreign property in a value of more than $100,000 Canadian, any time in the year, you got to report that form, and that would just kind of show where everything is and what it is. So.
And so you said personal wallets were considered Canadian? I thought they were considered intangible.
I'm saying if you store your cryptocurrency on a wallet, it's stateless, right? Like it's not anybody.
So does that de facto mean foreign, or does that de facto mean Canadian?
I would say that means Canadian,
Okay.
because it's not held in another country. It's not held, But the second that you hold it on an exchange, it's a foreign exchange, right? It's foreign property. So,
Well, thank you to everyone for coming out, and maybe give another round for our panel here.